Joining us now for a CNBC exclusive interview, Marty Chavez, Senior Advisor at 6th Street Partners, former Goldman Sachs CFO, former Goldman Sachs Chief Technology Officer, former Goldman Sachs Head of Trading. Marty, good to see you. Thanks for joining us.
It's good to be here. Hi, Will. Hi, Sarah.
A broad question on the markets to start, if I may. I mean, clearly volatility has picked up and tech stocks in particular have pulled back. Do you think that was probably due and that we'd started to get some sort of frothy type indicators leading into the last couple of weeks?
Well, if I'm just someone who's spent an entire career not making statements about causality, I think it's really hard. I think human brains are designed to find meaning and find patterns, and I always stick with the old one about more buyers than sellers.
Pivoting to the sort of long term and the fintech opportunity, you built out Marcus, or a big part of doing that at Goldman Sachs. What do you make of Walmart starting to enter the space and poaching a couple of Goldman Sachs people at the same time? Do you think that's more a proof of concept of what Goldman Sachs is doing or a threat to Goldman Sachs?
I think it is absolutely a proof of concept of what Goldman Sachs is doing. As you know, I mean, you're very kind. I was part of a whole team that evaluated the firm's possible entry into consumer finance and worked on it with many people and contributed to the building of it. And I would say, well, the way to think about all of this is that in the future of the financial ecosystem, which is already arriving, you had better be the producer of some products or services that are wrapped in APIs, application programming interfaces, so that computers can call them. And you better be an astute consumer of lots of APIs provided by others. And there really is no intermediate strategy, and that has very much been part of the success of the Goldman strategy.
But ultimately, wouldn't it be a scary prospect for the country's biggest retailer to dive deeper into the world of banking directly to the consumers?
Well, so there's many points of view on this. I actually had the privilege of teaching a class at Stanford GSB last spring. The course materials are online in case anyone wants to see them. How software ate finance. And I have a very strong thesis that the future of fintech is banks. Meaning no one's going to say, oh, I borrowed some money from the fintech, right? There are some things that banks need to do, and you are definitely going to find banks providing those kinds of banking services from inside the regulatory construct, and then they're going to wrap those services in a computer accessible form in APIs, and they're going to make those services available to everybody else. You saw a preview of that with the Apple and Goldman credit card, and you're just going to see more and more of that. There are some things like taking deposits, other things like health that are regulated, and they always will be.
Marty, one area I know you're heavily involved in is biotech. It's actually been an area of significant weakness in the market over the last couple of weeks. Do you consider that an opportunity, not per se as investors buying biotech stocks, but that this is a golden opportunity for the sector as a whole?
I see this, Wilf, as an unbelievable golden age for the life sciences and biotech. A long time ago when I was a kid, freshman year, I remember a professor said, the future of the life sciences is computational, and that future has arrived, and we're in the very, very early days of that. It is a very long-term theme going into the next many decades, so I don't pay too much attention to the latest 2-week, 3-week up or down.
I know you joined the board of, or the chairman of the board now of Recursion, a biotech company. Marty, I wanted to ask you, just back to the fintech theme, on the deal of the day, which is Square's investment in Tidal and adding Jay-Z to the board, a company that gets a much higher valuation than some of your banks that you're talking about. Does that make sense to you, this move?
It does. The move makes sense to me. And yes, there is this valuation gap, as you observed. I don't really know what to make of it. I would say one theory is that investors are beginning to understand the value and the importance of regulation. And yes, it has consequences for the return on equity. The banks are not going away, and they're fine businesses, and they are getting re-rated. We're seeing that. And I would say, at the risk of stating the obvious, that any bank that doesn't get really great at making software is not going to have much of a business in the future. So you're going to see this big convergence. You're going to see the so-called fintech firms buying banks, becoming banks, or deciding to just stay out of the banking side of the regulated ecosystem.
Shepard Smith here. Thanks for watching CNBC on YouTube.